Hello, class. Welcome. Today, we're going to learn the language of business, accounting. I know for many of you, accounting feels like a foreign language full of scary numbers. But trust me, at its heart, accounting is just storytelling. Every time money moves, it tells a story. Today, I will teach you the golden rules, so you can write that story correctly. Let's start by classifying the accounts. We begin with the who. We call these personal accounts. Think of these as any account that represents a person or an entity. First, we have natural persons, real human beings like Mr. John or Sarah. Second, we have artificial persons. These are organizations like a bank, a company, or a club. They aren't humans, but they have legal rights, so we treat them like people. And third, we have representative persons. This is when an account stands in for a group, like outstanding salary, which represents the money we owe to our employees. A quick tip, capital, the money the owner puts in, is also a personal account because it represents the owner. Next up, we have real accounts. These are the what. If you can see it, touch it, and sell it for cash, it's usually a real account. We have tangible assets like cash, furniture, and buildings, things you can physically touch. And we have intangible assets, things like goodwill or trademarks. You can't touch them, but they're very valuable. Now, pay close attention here because this is where everyone gets stuck. Cash is a real account because it's physical paper money. But a bank account is not real. A bank is an institution, so it is a personal account. Please remember that distinction. Finally, we have the why. Why did money move? These are called nominal accounts. They're temporary. On one side, we have expenses and losses, money spent to run the business like paying rent or salaries. On the other hand, we have incomes and gains, money earned like sales or commission. Think of nominal accounts as the gain or pain accounts. Now, let's look at a quick cheat sheet because these are the ones that confuse students the most. Capital, it goes to personal because it represents the owner. Cash is real because it's a physical asset. Bank is personal because it's a legal entity. Salary, that's nominal because it's an expense. But outstanding salary, that becomes personal because now it represents a debt you owe to a human being. So, where do we write all these stories down? We use a journal. Think of the journal like the camera roll on your phone. Every time a transaction happens, you take a snapshot right then and there. You record it by date. We call this the Book of Original Entry because it's the first place the story lands. The format is simple. We have a column for the date, a column for the story, which we call particulars, and the money columns. There is one unbreakable rule here. The total of the debit column must equal the total of the credit column. If they don't match, your math is wrong. Always check your balance. Now we reach the most important part of the lesson, the golden rules. Memorize these, and you can solve anything. For personal accounts, debit the receiver, credit the giver. For real accounts, debit what comes in, credit what goes out. For nominal accounts, debit all expenses and losses, credit all incomes and gains. Let's apply this to a real problem. Mr. John started business with cash. Step 1. Cash is coming in. Cash is real. The rule says, debit what comes in. Step 2. Mr. John is giving the money. He is personal. The rule says, credit the giver. So, we debit cash and credit John's capital. Next problem. Purchased furniture for cash. Ask yourself, what is coming in? Furniture. It's a real account, so debit furniture. Ask yourself, what is going out? Cash. That's also real, so credit cash. We simply swapped one asset for another. Last one, paid electricity bill by cash. Electricity is an expense to run the business. It's nominal. The rule says debit all expenses. Cash is leaving the business to pay for it. The rule says credit what goes out. So, debit electricity charges and credit cash. So, whenever you see a scary accounting problem, just follow the 3 steps we used. Identify the accounts, classify them, and apply the golden rule. Now, it's your turn to shine. Take your time, trust the rules, and practice. You've got this. Thanks for listening.